Well, good morning, YouTube. This is Louie. I thought I would take a quick look at the price of silver since we've had some pretty extreme moves to the downside lately. Courtesy of Bullion Vault, we have a one-day chart of yesterday, July 12th, where it looks like the high was around 1593 and the close was around 1591 and the low for the day was around 1577. Very interesting. So feels cheap, although I know that there are others out there that believe we are headed into the 14s. I'm going to form an opinion here if you'll just hang with me for a second. I'm going to go out to first the 20-year chart. Okay, so for those of you that do not recall, back around 2011, we had our big run, the biggest run since the Hunt brothers cornered the silver market. This was in 2011, and silver spiked at 46.47, according to this chart. And then started to tumble back. It is interesting to note that it spent, let's see, the 26th of December, it was $27 an ounce. And then on the 26th of March, hold on one second. Let me just read these off really quickly, these points. June 29th, $17. Fast forward to November, so what is that, about 5 months? Now it was at $29. January it was at 32.45, and then let's see, February 24th, 37 bucks, and finally on March 26th or thereabouts, 46.47. So the trade down continued over June 24th, September 22nd, let's see, March. Last gasp, I think, happened around November of 2012. And here is the breakdown around February of 2013. It broke the previous lows and crashed all the way back to $20. Okay, so this is a previous support which has turned into resistance in the future periods. So around $20, then it cracked 20, spent some time at 15.39, and here is the point that I remember quite well in late 2015, where it bottomed out around $14. Then it took a really big run from 14 all the way up to 20. Now I recall it breaking 20 and thinking, wow, this is really great, everybody's making money. But then when I went on to bullion boards and so forth, I noticed that everybody was selling their bullion. And it turned out they were right to do so. 20, so the previous breakdown right around here was around 20, and then it went lower, so that created resistance it could not get through at 2029, and now we have seen serious setbacks all the way down to 16, and now the high 15s. But I'm going to go to a little closer view here. Let me go to a 5-year view. Okay, so the thing of note here is first, we had this run to 20, right? I'm going to kind of ignore that for a minute. But ever since the run to 20, right, we had the extreme sell-off down to 14 or so. But ever since the run to 20 and the back off, look, we bounced off of 1576. We bounced off of 1591. We bounced off of 1586. And now we are at 1590. Okay, now it seems like there is substantial support in this 1590 zone. Possibly we will break it, but I don't know. It looks like pretty solid time to buy to me. Also, there's a wedge forming. You can see that triangle concluding down. Will it break up or will it break down? I think that will determine whether you should, jump back in or stand back. But I don't really have a problem with the price of silver at 1590. I mean, your downside risk is maybe 14, which would seem a long way from here, but I recall buying at 20 and feeling pretty good about it. So anywhere here, 1590 or lower looks like a great buying point and could possibly be, the launch point for whatever happens next. Again, looking at 20 years, look at that's a pretty solid support line there. Ever since the last big run up, it seems like it is just kind of consolidating and gathering strength around that $16 number, a little more, a little less. So I'm liking that. The other thing that, I mean, I'm not liking, losing money on bullion, but I don't see anything really fearful here in these charts at all, except maybe an opportunity to jump in a dollar lower. But good time, I think, to aggregate more bullion. Just for a second here, I wanted to take you over to E-Trade and show you the paper trades. All right, we're over at E-Trade, which you can open an account there with a couple of dollars. It really doesn't take much. I think they might even pay you to open an account. And in E-Trade, if you choose to trade paper silver, or use paper, silver, long or short to hedge your physical investments, you can do so easily. This is the SLV. Let's see, right here. SLV is the long silver that tracks a spot. It doesn't do it at the same number. So for example, SLV is currently trading at 14.86, about a dollar below the price of silver. So there's a correlation, but it's not a one-to-one match on the price of silver, so don't let that scare you. But when silver moves, SLV moves proportionally, and here we can see the same. Here's a 3-day chart. Looks like this morning we're having a spike back up above 14.95 at the moment. That would be oh, is today the 12th or the 13th? I think today is the 12th. And this move, so yeah, Thursday. So it was down here in the high 15s or the high 14s, and in this case it is spiking. But if you want to go long an SLV, you just let's go back over to the snapshot of the SLV. Okay, here it is. So easy enough to trade. You just click in how many you want to buy, etc. You want to buy 100 SLVs. That'll be $1,497 with a $5 to $10 trading fee. Now the other interesting thing, and while I'm here, if you want to go long the GLD, which is the ETF for gold, very similar. That's trading at 117.98. Again, below the 1250. You might expect that to be 125, but it doesn't have a one-to-one correlation with the GLD. But it does correlate, but it's not exactly the same numbers. Here we are with gold. Also had a drop yesterday and trying to come back this morning. So that's GLD long. If you'd like to go short, if you want to go short silver, you can pick up something like the ZSL, Zebra Silver Larry. This one is a 200%. So when silver goes down, this goes up twice as much proportionally. It's inverse to the down move and twice as much. So if we look at this chart here, let's see if we can get a bigger chart. And let's go for a year. All right, so what you'll see, let me try to make that bigger. What you'll see is, here we go. So this was the latest spike in silver, drove this ETF down, and the latest drop in silver drove it to what is that, like a 1-year high right around 36. So just like I thought silver was bottoming, it looks like the silver short ETF, look, we've got a top, a top, a top, a top. So, but in any event, if you were to go back to the last time, let's say that silver hit 20. Let me go out 3 years. It should be pretty obvious here because it will be a trough in the short. Um, all right, so I'm sure the last time silver hit 20, it must have been right around here when this ETF was trading at 26, 27, 28, right? So as silver dropped back down, you can see this thing going up as high as $40 and dropping back, but every time silver dropped, this went back up into the at least the mid 30s. So this is one way that people can hedge their silver investment. You do not have to just ride the physical metals. You can, and don't get me wrong, I don't do much of this, hardly ever actually, but you have lots of power here to protect and hedge your investment. If silver is up around $20 and you think that it's going to be repelled, like it often is, you can pick up some of this. What was the name of this chart? Some of this ZSL, and you do a paper trade for the short, and if silver is repelled, yes, your bullion is worth less, but you can sell your ETF at a substantial profit. If you were to pick this up when silver was at 20, it would have been 26 bucks, and sold it today when silver is at high 15s, it's at 35 bucks. So that's like a 30% return, and then you'd have the cash to reinvest in bullion, and you would have hedged your physical metals. The other thing you could do, but let's say we were at the high 40s and you could not get to the local coin shop, or you had a bunch of 100-ounce bars that you were unable to unload because nobody had that much money. Let's just say that you were having trouble selling your bullion because everybody starts selling right around here, right? At least the sharp money was selling right around here. So, but you can't get into your LCS, he's out of cash, none of your friends want to buy at $50 an ounce, etc. So what you can do is you can go back over to um, the ZSL, right? So back to the ZSL, the short, and you can pick up however many shares of ZSL you want. Now this is a 200% inverse, but you can pick up the ZSL as much as you need to hedge, essentially paper sell your physical bullion. So you would hold your bullion, but you would paper sell some part of it, and this is a 200% inverse, so you'd have to be really careful not to sell obtain more risk than you want, but you could sell a substantial portion of your physical stack in a paper ETF trade that would cost you under $10 and would substantially liquidate whatever portion of your stack you were trying to sell, or at least give you the equivalent sales price. So therefore you would not be shut out at the transaction window, so to speak. All right, well, I've gone on too long once again, but these are advanced strategies which should only be used with the advice of a real professional. I am not a real professional, and I do not offer uh, investment advice, but this is one way that you could hedge your stack and trade the range, if you will, if you think will continue to be range bound. Of course, when you do when you do short a market, there is substantial risk. So be very careful with this, guys. And I still believe in owning my long silver, but sometimes I augment that with paper long silver. And I think if the timing is right, there could be times to paper sell your long silver or a portion of it to trade that range. That's all I have. All right, so you guys go ahead and comment what you think about some of these strategies. And what do you think about the price of silver down here in the high 15s? Are you buying more? Are you just exhausted? Don't let them wear you out. This is when the tricks can happen, when people get lethargic and stop buying. So could be an opportunity here. All right, Louis signing out. You guys have a great day.